Welcome back, I'm Dhesi. Here's what matters this week. Iran has reclosed the Strait of Hormuz on Saturday evening. The IRGC also came out with a statement which essentially said the control of the waterways had returned to its previous state. And it also said that no vessel should make any movement. Any ship approaching will be considered cooperative with the enemy and it will be targeted. Tankers are trapped at anchor in the Gulf, and the IRGC gunboats have already fired on vessels attempting to make the cross. India has also summoned Iran's ambassador after two Indian-flagged ships were struck. Trump's response was they got a little cute. What we are looking at going into this week is a total reversal of Friday's move. Oil dropped 12% on Friday when the strait reopened. Equities hit all-time highs. The dollar also drifted back towards pre-war levels. All of that was built on the assumption that de-escalation was holding. As of Saturday night, it is not, and the clock now matters. And the current ceasefire is reported to expire on Wednesday. Trump has hinted he may not extend it. His words on Friday were, maybe I won't extend it, so you'll have a blockade. And unfortunately, we'll have to start dropping bombs again. So this week is not a data week. It is a geopolitics week. Everything else is secondary. Let me walk you through what happened. So on Friday, Iran declares Hormuz completely open. Oil then drops 12% in a single session. Brent closes around $89 per barrel. The S&P 500 moves to record highs at 7,127. The dollar index tests pre-war levels, so again a massive recovery. On Saturday, however, the IRGC closes the strait again. Tankers are trapped again, gunboats are firing again, and the ceasefire cited as violated by the US blockade. By the time you are watching this, Monday's open will have repriced significantly. I'm not going to guess the magnitude, but directionally, oil gaps higher. Equities will gap lower. Dollar bid back as safe haven, and the rates curve flattens as growth scares re-emerge. The question really for everyone running risk this week is how much of Friday's move do you actually trust? The practitioner read, very little. Friday's move was built entirely on de-escalation optimism, and that optimism no longer exists. So, for hedging, the approach is straightforward. Friday's levels were not sustainable, given what we know now. Wednesday's ceasefire expiry is the next binary event, so you need to position accordingly before Monday's open if you still can. And this is the second and more important part of the story. The current truce expires midweek. Trump said on Friday, and I'll be careful on the exact quote here, that we may not extend. The alternative he outlined, blockade remains, US forces resume strikes. Talks in Islamabad last weekend also failed, and Pakistan's army chief has acted as an intermediary with fresh proposals. Iran has not yet responded, and on Wednesday it either delivers a ceasefire extension which allows markets to breathe out, or there's a breakdown. And if there's a breakdown, with Hormuz already closed and the US blockade already in place, the scenario the market has to price is not a slow drift back to conflict. It is an escalation from a much worse starting point than where it was 2 weeks ago. For duration, FX exposure, commodity positioning, Wednesday is the most important day of the week. Any Fed event, any data print sits underneath all of that. And let me be specific about transmission channels. Brent crude gaps higher on Monday's open. The base case retraces a significant portion of Friday's 12% fall. Wednesday, if there's a breakdown, Brent goes materially higher from there, potentially testing the levels we saw during initial conflict peak. Gold is already up 4% over 10 days, and that extends if there's a breakdown on Wednesday. Also, sustained Hormuz closure plus ceasefire collapse, that is the scenario for gold to rally into. Going on to the dollar, that's a complicated one because initial conflict, dollar was the safe haven, and Friday's reversal took it back towards pre-war levels. Monday gaps back up on safe haven bid, but the longer question, US twin deficit and political uncertainty around the Fed eroding dollar safe haven status over time, that remains open. Equities gap lower expected on Monday. All-time highs on Friday were built on peace and rate cut assumptions, and both of those are in question now. Also, watch the US tech names. AI composition risk, that really starts to matter now. 10.7% of investment grade indices. Any earnings disappointment compounds with a macro shock. Moving on to rates, front end was pricing a dovish Fed and an easing path. Wash on Tuesday is now much more complicated. If the ceasefire breaks down on Wednesday, it's very hard for the next Fed chair nominee to sound confidently dovish 24 hours before that binary decision. So expect more measured language than the market would have priced on Friday. Moving on to credit, spreads were tight. US investment grade 81 basis points, US high yield at 286 basis points. Any Monday reversal starts there. Wednesday escalation, if that happens, then high yield widens extremely fast. Using Friday's levels as the baseline, but these will definitely move on Monday open. Dollar 2-year swaps 3.84%, the 10-year at 4.12%. So the front end has moved lower on ceasefire optimism. That move now reverses, but partially, not completely. Safe haven bid into treasuries supports duration. There's also a growth scare, and that offsets some of the hawkish repricing. Moving on to sterling swaps, 2-year at 4.19% and 10-year at just above 4.54%. UK CPI is on Wednesday, and that is still happening. That is still a live event, but the UK is a heavy energy importer. Oil gapping higher all week, so the inflation picture is likely to worsen, regardless of what the March print shows. So Bailey's patient stance becomes harder to hold. Euro swaps, 2-year at 2.6% and 10-year at 3.01%. The Eurozone, which is most exposed to energy supply risk. So sustained Hormuz closure is a direct hit to European industrial and consumer inflation. For rates desks, positioning light was the defensive read on Friday. It becomes the correct read, now looking at it with hindsight. However, do not extend risk into Wednesday. That's kind of general read into things until you see how the ceasefire resolves. Moving on to FX, Friday levels, Euro 1.176, cable at 1.35 and yen at 158. So these will reprice on Monday. Expect dollars to gap higher on safe haven flows, so positioning matters. The market was broadly neutral to modestly short dollars. Short dollar positioning has to now unwind given where the geopolitical story is. So for treasurers with dollar denominated exposure, if you are waiting to hedge, Friday's levels are the best you'll see for a while. Euro dollar downside exposure on energy. Europe imports 2/3 of its energy, so a supply shock hits the euro directly. Cable at 135 on Friday, so that is likely also to gap lower on Monday. UK CPI on Wednesday, less of a binary event. April and May prints will reflect higher oil if Hormuz stays closed. For the yen, watch it carefully. It strengthened on Friday on safe haven flows, but held back by carry dynamics. Serious Wednesday escalation, yen appreciation could accelerate as carry trades unwind. Also, Brent closed Friday around $89. Monday's open will be materially higher. About 20% of global crude and LNG flows through Hormuz. I think everybody probably knows those stats now. Tankers are trapped, gunboats firing, the US blockade is in place, the physical market cannot clear. So this is a supply shock being actively enforced by military forces on both sides. Gold is at 4,830 and that is up nearly 4% over 10 days. The asset that benefits most directly from the current scenario. Geopolitical risk, dollar uncertainty, inflation risk, all of those are present. And Powell said on the 30th of March the Fed would look through a supply shock as long as long-term expectations stayed anchored. That framework was written for a shock that was clearing. A reclosure after 10 days of optimism is a different story. The S&P 500 at 7,127 on Friday, and that is all-time highs. Monday is very likely to open lower. The Netflix miss last week, that's the first wobble in that AI mega cap story. Earnings continue this week, Tesla and also others. So disappointment into a macro shock is a bigger event than a disappointment in isolation. On crypto, Bitcoin is around 75,000 and on Friday it was up 7.2% over 10 days. So that is tracking risk appetite. Monday is likely to see a pullback. Okay, moving on to the week ahead. Monday is the first session reflecting Hormuz reclosure. So watch Brent at the open, watch the dollar, watch equity futures. On Tuesday, Kevin Warsh Senate confirmation hearing. So that's meant to be the week's big Fed event for the week, but it's now complicated by geopolitics. So any dovish signal has to be balanced against an active escalation scenario. Also, US retail sales. Tuesday evening is Bank of a rate decision, and then on Wednesday, two events dominate. UK CPI in the morning at 7 AM London and the ceasefire expiry during London evening. Whichever way this goes, Wednesday is the day everything pivots. Thursday, US PMIs, initial jobless claims, secondary if Wednesday delivers escalation. Friday, Japan CPI, but running above all of it, comes back to Hormuz and Wednesday's ceasefire decision. The data calendar matters a lot less this week. It's really driven by geopolitics, and I would say the market is geopolitics this coming week. So that's your week ahead. Bookmark it, come back on Friday, see how it aged. I send a daily version of this every morning on Telegram, free link below. Also subscribe if you want the next one, and drop the one level that you're watching down below.